Well, Happy New Year to everyone. I'd like to welcome all to another edition of Market Timing for the last week of 2010 as we move into the first week of trading in 2011. We're going to look at a handful of charts today, some of the broad foundation type indicators, and then we're going to take a look at our regular weekly and daily market timing chart. First, what I have up here is the daily cumulative advanced decline issues total. This is a 3-month chart. So what this does, this adds up the numbers of advancing issues and compares it to the declining issues, and it just runs a total of that number. We have this going back to almost the beginning of October, and you can see from the direction of the green line in this area that we're at over 53,000 issues cumulative going up at this point. You can see the moving averages are also moving up with the line above that. That's a very healthy indication that this market has some room to go up. We don't see an immediate downturn, although a pullback is a possibility. The second chart we have in this week's analysis is the percent of stocks above their 50-day moving average. You can see that the number of stocks above the moving average is 75%. The number of stocks above the 200-day moving average is almost 80% now. Both these, the 50-day and the 200-day moving average, is considered by most professional stock traders to be essentially the demarcation point between a bullish stock and a bearish stock. So the more stocks we have above the 50 and the 200-day moving average, the stronger the market will continue to be. And these are very healthy numbers here. The next two charts are a little bit of a concern. Not a whole lot right now, but we're going to keep a close eye on them as we go forward here in the new year trading. This is a line of the 5-day total of the new highs and lows, and you can see what I've drawn here is a green line at about the 250 mark and a red line at the minus 250. And generally, what you want to look for is this number to be above 250 for a healthy market, and of course if we're in a bear market we'll be down below the minus 250 mark. You can see that we've drawn a pretty wide channel here. We do see a decline last week of the new highs versus new lows. We're still in a bullish territory, but I expect this to pull back here a little bit and maybe reach down to the 750, 500 before we move upwards. But like I say, this is a little bit of a negative, but we'll keep our eye on this item. The next item for this week's market timing assessment is the VIX. We've spoken about that several times on our blog. You can see here that late last year, the VIX created a low that was equivalent to the low that occurred right before the stock market fell off a cliff. If you remember correctly, let me roll this up a little bit. This is the broad market index. You can see as the VIX moves up, the market tends to decrease. And again, as the VIX moves down, you can see pretty high peaks here. As it moves down from a peak, the stock market tends to increase. It's an inverse relationship. And you can see that that's true. As the VIX comes down, the market tends to go up. We've had a pretty good rally here since the August-September time frame. Unfortunately, the VIX is starting to move up, so this is a little bit worrisome. It has not, the moving average have not crossed in the upwards direction yet. So we'll, like I said a couple of minutes ago, we'll keep our eye on these two items as we go forward here. The next chart is the weekly chart of the broad market. You can see that prices have moved above the prior support level that were the highs created in the late April and October, November time frame. I believe you'll find that this level at the 12,500 to 12,750 will act as support. I fully expect prices to pull back here a little bit and maybe come back and test this support level. At the same time, the fair value will move up, and the lower trend line is moving up also. So what we're seeing here is an upwards triangle. If prices move down as fast as I expect, we should meet our support somewhere in the January time frame, and then hopefully we'll move up from there. So this is a weekly chart. Next chart on our list is the daily chart. You can see, just like I suggested in last week's market timing post, we did have a very flat week last week. We had 2 or 3 up days and about 2 down days. Again, volume is very low last week, expected as a result of the holiday trading. But in general, we have a decrease of volume as prices have increased, and that's another worrisome sign. But based on the health of the other indicators, I'm not really sure I want to throw the flag in on this bullish market right now. As I mentioned a little bit before and on a post on the website, I fully expect this to continue, the prices continue down, maybe to fair value, maybe to even touch this trend line a little bit. I think that's a very distinct possibility. And then hopefully if those trend lines hold, we'll see a move up from there. And with any luck, we'll be able to take the caution side off our market assessment and then move to more of a bullish stance. So that's the market timing assessment for the first week of trading 2011. Visit our website at www.stock-trading-picks.com. You can see our stock picks for this week and also view the written verbiage on this market timing post. So good luck on your trading for the first week in 2011. Stay tuned to this website and we hope you make a lot of money in this new year. Thanks for listening.